Hey folks, it's Vic Noble here with your weekly trade example for the week ending December the 16th. Can you believe that? 2011. Christmas is almost upon us. I've probably talked about this before, but it really bears repeating, and that is the idea of keeping your trading plan simple. Well, assuming you have a trading plan. If you don't have a trading plan, that's another issue. And today I'm going to show you something really simple. And the idea is this, that all you need is a recognizable candle and a pattern to go with it, and you can do extremely well. And I should add in, I guess, learn to read support resistance a little bit. I've gone over that a lot in these weekly trade examples, and hopefully that's helped a bit. But here's the Australia US dollar on December the 15th. And this is a downtrend here. Would you say that's a downtrend? I'd say it's a downtrend. Well, if you're a trend trader, are you going to want to be buying this? No, probably not. That's not the way you like to trade. So you could just wait and structure your trades to the short side. Nothing wrong with that at all. If you're a day trader, though, I'm going to tell you something. There are many great little opportunities to buy counter trend bounces in situations like this. Okay. Now we may or may not take a bounce just because price hits one of these levels. It depends how it sets up. Well, I can tell you today, the first of all, technically we're at this level. We had this very nice rejection and move back up here, kind of a hammer situation. And what caught my eye here was that at the same time we had that, if you go down to the 15-minute chart, this is a recognizable pattern. What's happening is that the price is going lower like this, right at this level that we saw the support on a higher time frame, and the MACD is going higher. This is positive MACD divergence to price, and it did what we call qualify. And so what you want to do is buy this as it comes down for a dip. And what it does is it enables you to get into these trades with really low risk. This trade was taken on with just 20 pips of risk. The buy is at 98.78. And when you get into these trades, what you want to do is a couple things. First of all, rather than just get into them, it's extremely useful to understand the market environment and the sentiment of the day, situations with correlated pairs. They can help your trading big time. In fact, in our new short-term trading course, which by the way is going to be out very soon now, the next few weeks, it's done, maybe even sooner. Anyway, in that course, we go into that stuff a lot, and how it can really help your trading like big time, especially on your profit targets and things like that. But for entry as well, just knowing about the kinds of trades that you want to be taking. So in a trade like this, it's in any trade, it's nice to get your position funded, meaning that you get the risk out of the trade. Maybe you've even taken some profit, and you're in a no-lose situation. And then based on the way that the market's behaving, you can decide how to take profits. But there are many good places to take profits on a trade like this. And as price is moving up, the sentiment of the day favors more of a run. And this pair, by the way, the Aussie US dollar, is very correlated with the S&P 500. So if you see the S&P 500 moving pretty strongly, you can be pretty sure that this is going to follow suit. And so rather than, the thing is, everybody's going to get different results. Some people want to take profits at maybe old resistance levels like across here, and that's fine. Nothing wrong with that at all. Maybe you want to read the sentiment and say, no, you know what, I think this thing's going higher. And you can go drop down to like an hourly chart and say, I got in down here at 98.78. I think we can see it up into this level here, and I'll take a profit up at that level. And maybe there's some pivots and Fibonacci levels up in this area too. And in fact, I'll just show you what happened here. That was the move that happened right there. It came up, hit it, and bounced off like really nicely. By the way, that was right at the London close. That's another story. So that move right there was worth over 100 pips. Okay, just with a 20 pip initial risk. Okay, so I'm not saying that you're going to necessarily get that many pips, because everybody's, like I said, people are going to take that trade off at different places. But if you read the sentiment properly and you read the conditions of the day, it'll give you reason to try to stay with it longer and trail your stop. But no matter what happens with it, if you only got half of that, if you only got 50 pips, do you think the 50 pips is very good? I'll tell you guys something here. And maybe, I don't know if you know this or not. Did you know that if you risked 20 pips per lot, okay, and you risked about 1% of your account, no more than that, and you made 40 pips per week, the entire week, not 40 pips a day, 40 pips per week, you'd make about 100% return on your money in a year. Do you think 100%? How many people do you know that got 100% return on their money? Did you get 100% return on your money last year? So don't think that you have to, make all of these hundreds of pips every week to do well. That's not, you got to eat the elephant one bite at a time here, right? It's not like you're going to get it all at once. So I just, the lesson for this week is, recognize candle patterns and watch for them when they hit key levels and see if there's anything recognizable in it. Was there a trade in here to the long side? How about a trade when price came up into this level here and finally rolled over like this with the engulfing candles going down like that? What can you do? And there are some really good short-term trade setups that we'll be going over here that are extremely, very, very accurate. And together with good trade management and risk management, great methodology and an approach to your trading if you like day trading, and that's what it's going to be all about. So anyway, I hope that that's helpful. Watch the candles, watch your patterns, and you know how many patterns you think you need to learn. How about one? You don't have to learn a whole bunch of patterns, okay? In fact, it's a big mistake to try to do that. So keep it simple. All right, that's the lesson this week. Watch for the candle patterns at key levels of support resistance, and you got yourself a great start to the whole game. Okay, you guys have a great weekend and week ahead. I'll be back at the end of next week, which will be the last one until after the new year, the last weekly trade example till after the new year. And I will see you then, all right? Have a good week ahead.